The U.S. economy, and maybe the global economy, has been going through a rolling recession ever since the Fed started raising interest rates. I do believe that the Fed now is on high alert. Inflation is unwinding much faster than we're seeing in the traditional indexes. That will be very good for risk assets, and Bitcoin among them. We have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million.
Cathie Wood provides an update on Bitcoin for 2024, discussing the significant impact Bitcoin ETFs will have later in the year. She predicts a bullish surge in Bitcoin's value, with the asset class potentially growing from just over $1 trillion to $2 trillion, over 20 times its current value. This would push Bitcoin's price beyond $1 million, driven by BlackRock's influence and the involvement of major hedge funds and institutional investors. As more Bitcoin ETFs receive approval, it will mark a historic moment for the Bitcoin community, something many have anticipated for over a decade. ARK Invest CEO Cathie Wood emphasizes the decentralized and transparent nature of the Bitcoin network, making manipulation unlikely. Now, let's dive into the interview with Cathie Wood.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now, by clicking on the link below to get your exclusive copy just under $10.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course.
Mm-hmm.
So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year. And that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter or earlier in January, Bitcoin led the market, and so began to. And so we're watching Bitcoin now, and of course we're having a sell on the news moment after the 11 Bitcoin ETFs are approved, and I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity value. After this election, I don't think Chairman Gensler will remain at the SEC, whoever is elected. I think he has aspirations for some kind of political appointment, so he may go for that reason if Joe Biden is reelected, or he will go altogether if a Republican is nominated. So the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We have the Coinbase hearings. We'll get lots of information about what is not a security during that trial. So I do think that raises the odds of an Ethereum spot approval. The Gensler could be in the way, but we do think it will be approved.
Cathie Wood also touches on the high anticipation surrounding the Bitcoin ETF among investors, highlighting the crucial role of digital wallets. The crypto community is eagerly watching for further developments, as these insights and the SEC's decisions on future ETF approvals are expected to have a major influence on the market's direction in the coming days and weeks.
I think that Coinbase is going to do us a great service through the court system, and the court system is going to do us a great system. You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for regulatory power over derivatives. It went all the way to the Supreme Court, which this probably will, and that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight. But those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. This could be an election year issue, and I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, wow, he's come up the learning curve so quickly and knows so much. This is fantastic. Knowledge and education. Knowledge is power. Education, obviously, is the route to knowledge. So I think, yes, I think the odds, I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters, and I know that Washington is hearing that loudly and clearly. I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is. It's a technology, yes, and it's a monetary system. Then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk like there is in our banking system. You're not going to be held hostage like you were in 08, 09, wondering if your bank was going to survive or you'd get any more than 250,000, the guarantee, the FDIC guarantee out of your bank. So this doesn't happen with Bitcoin. Education. Wow. How many risk off and risk on assets are there? So I think the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation.
Cathie Wood highlights the growing significance of the crypto market, noting that with real money now flowing in, institutional investors are driving cryptocurrency prices higher. She predicts substantial gains over the next 3 months, reinforcing Bitcoin's enduring relevance as both an asset and a hedge against currency devaluation. Wood expects Bitcoin to continue its parabolic rise leading into the halving of 2024. This year, she has also focused on the progress of crypto legislation in the House, which signals increasing interest in the crypto space. While crypto legislation may face challenges due to political opposition, Wood advises the companies she invests in to spend heavily now to capitalize on the immense growth potential. She estimates that ARK's focus on technological advancement is valued at around $7 to $8 trillion, less than 10% of global equities markets. Emerging markets are increasingly relying on digital currency, and Wood believes that, based on the current market outlook, decentralized finance will eventually overtake and replace many traditional financial services companies. DeFi platforms could offer lower rates to savers and higher rates to borrowers. What are your thoughts on Cathie Wood's insights into the current financial market? Share your comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.